Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, looking at PCLN NVDA TSLA NFLX CMG. So PCLN has an inside bar heading into Monday, keeping in mind Monday is a shortened holiday week, half-day Monday, no trading Tuesday, options. Time decay will be more significant. So the inside bar range is 1870 support and 1887 resistance. We closed right at the day on Friday, right at the low of the day on Friday, after a dump at the end of the day in the market, the last 15 minutes of trading. Overall, we're still in this $50 range with 1850 support and 1900 resistance. A lot of chop in between those levels. And if you like short-term trades, then that's for you. But otherwise, you can be waiting for either a close above 1900 for a bull break or a close below 1850 for a bear break. And as of right now, we're pretty much right in the middle of that range with a slight edge to the bears because of that close at the low of the day. So we're going to be watching very close. The correlation to SPY is certainly strong. And on the weekly time frame, we can see we're still setting this little lower high, lower low pattern. But overall, it is still a bullish consolidation pattern over the past couple of months. And really, this bullish consolidation could lead to continuation from here, as not many other names have consolidated this significantly, which is a good sign longer term for the bulls. Unless we were to break 1781, that would be a significant bear break, but we're still $90 above that level currently. NVDA weakness continues, so we're shifting momentum here, and the very key support to be watching is 142.11. If we break that level, we have a lower high and a lower low, and the bears right now have a lot of volume over the past 2 weeks as we head back towards this level. We close near the low of the day here as well, so 143.50, 142.11. If we break 142.11, we're looking at 136.44 as the next level. Keep in mind that on the weekly longer term trend, after confirming the bearish reversal gravestone doji, we could easily pull back 10% from this level and still be in a very strong weekly uptrend. So we do have some downside risk, and that is the direction the momentum is currently heading. So the bears are strong here. We have closed below the exponential, the 4-period exponential weekly support for the first time in a couple months, and we're looking at potentially seeing a bearish MACD cross and a bearish TCG cross. Still a ways to go there, but we're watching to see if that is where we are headed. So bears in control of NVDA short term. Tesla also seeing the bears in control short term. We have an inside bar to be watching on Monday with a 359.62 support and 366.77 resistance. So watching how this inside bar breaks will be key. And then we're looking down at 354.10 and 350.62 as a couple key support levels as well. So losing the middle Bollinger Band daily support, exponential resistance, driving the price to the downside. Weekly chart, bearish engulfing candlestick. This is the first red candlestick we've seen in 5 weeks. We have not seen 2 red candlesticks in a row in the past 4 months. That would be notable if we see another red confirmation pullback candlestick this coming week. So we're looking down at, and again, same thing as NVDA. We could pull back down to 320 and still be in a very strong weekly uptrend. So we could easily see 10% pullback here on Tesla and still remain in control. We have a tweet coming, and we had a pre-tweet tweet, and Musk certainly knows how to rock those tweets in terms of keeping the price of his stock up. But we'll see what that news is. We'll see how the trading, how the market reacts to it on Monday. But we are seeing momentum and a correlation between NVDA and Tesla, which were both our lead bulls and are now seeing some weakness. And again, we can pull back significantly while still maintaining an uptrend. Netflix is seeing weakness as well, as it is part of the tech sector. We have not made a clear bear break yet, but we're on the verge. Inside bar to be watching on Monday with a 148.42 support and 150.72 resistance. I'm liking the setup here. If we get a bear break of this inside bar, that's a nice bear signal for risk to reward, because if we break this level of 147.30, we're looking down at this gap fill of 144.50. So essentially, if we break 148.42, we can be looking for a swing position down towards 144.50 as a target, and that may take a week or two to play out. But the bears certainly have tech sector momentum right now, and we have our low, or make that our high, our low, lower high, and we're still in a higher low, but if we do break that 147.30 level, that will be a clear shift in momentum, which has already begun to shift with the bearish MACD cross on the weekly, bearish TCG cross following through on the weekly, the first close below the weekly middle Bollinger Band since back in July. So this is 11 months where we have had this middle Bollinger Band support. That's now lost. We have not seen a bearish TCG cross on this name in a very long time, about a year as well. So we are seeing a shift in momentum, and it looks like the bears are about to take over a little bit more significantly than we've seen in a long time. CMG is a bear flag on the daily time frame. The bulls are trying to see an oversold bounce, but with the upper wicks and with the inability to get over the 200-day moving average resistance, the bears are affirming their control. So we've rejected from this 200-week resistance 4 times in the last 7 days. We closed near the low of the day on Friday. We're looking down at support of 410.96 and 400 psychological. So the bears are in full control of CMG still. I do not like CMG bullish unless we close over the 200-week moving average, or I should say the 200-day moving average. On the weekly time frame, it is a bullish reversal doji, but we are rejecting from the 50-week resistance here as well. So if we cannot get over the 200-day and if we cannot get over the 50-week, the bulls prove absolutely nothing on this bounce, and we continue to monitor for the bears to remain in control down towards that 400 psychological support. So that's what we've got heading into the holiday week. Certainly bearish action in the tech sector is still prevalent, and we'll be watching to see how much follow through we get. I appreciate you watching. See you soon.